Mortgage rates over the last 2 weeks have gone down. They're now down to 6.63% on March 6th. So a lot of sixes there. And I don't know what that's about, but it's the seventh consecutive weekly decline, representing the lowest level in over 2 months. I haven't heard that the Fed dropped rates.
Right.
So I would love to ask you what's going on with interest rates. Why are we getting these drops?
Well, it's a great time for us to reinforce what we have been teaching about on this show, especially over the last 2 years, about how our 30-year mortgage rates come to be. And it may be somewhat affected by the Fed cutting the Fed funds rate, but there's a whole lot more to it than that. And over the course of the last couple of years, we've talked about how rates have gone up, even though the Fed hasn't raised the Fed funds rate. And now we have an example where the interest rates for all of our mortgages has gone down substantially, about a half point, even though the Fed held the Fed funds rate steady. And the reason is because the most correlated to our 30-year average interest rates is actually the yield on the 10-year Treasury. Because at the end of the day, what drives our mortgage rates are just investors on the other side of the table. And there's an investor on the other side of the table, and he or she is saying, you know what, I could put my investment in mortgage-backed securities, or I could put it into 10-year treasuries. And over time, there typically is a certain spread between those. And they basically say, well, the risk is commensurate with that spread. And so if we want to know what's going to happen with our interest rates, we need to look at what's happening with the 10-year Treasury yield.
Got it.
Not so much what the Fed funds rate does.
So what I'm hearing is people out there with a decision to invest their money, right? Like us here, we all by de facto invest in rental properties, or strive to invest in rental properties, or else we wouldn't be having this conversation here. But folks out there, they just look at their pool of money and they look for safe places long-term to put their money. And they compare real estate investing to bonds. When bonds are looking really attractive, they're ticking up in their returns, then that makes people go there, and therefore the real estate market lowers interest rates in order to make it more attractive for the people that are making that decision. Is that
I think you're on the right track. Let me kind of synthesize. So when the 10-year Treasury yield goes up, our interest rates on our 30-year mortgages go up.
Okay.
When the yield on the 10-year Treasury goes down, our mortgage rates go down. And the yield is inversely related to the price. So when the yield on the 10-year Treasury goes up, that means that less people are buying. Got it. So there's less demand for it. So what's happening right now is the opposite. Right? The
demand
yield
is rising
on the 10-year Treasury is down.
Okay.
Demand for the 10-year Treasury is up. And that's why our mortgage rates are down.
Got it.
Does that make sense? There's a lot of up, down there. But long story short, 10-year Treasury down is a good thing for lower interest rates.
Okay, got it. All right, sweet. So interest rates are lowering. What's it look like right now for investors? What does that mean for us who choose to put our money in rental properties?
Well, it's a great thing for us, right? It's a great time to buy when interest rates were about a half point higher. But now when we look at interest rates being a half point lower than what they were, call it 2 months ago, you instantly can see the benefits of this day one. What this means is a lower interest rate on your mortgage that you get. You didn't have to buy the rate down as much to be able to get that lower interest rate. And it's more cash flow in your pocket. Day one, more cash flow in your pocket, because the rents and all the other expenses, revenue, and everything else is the same today as it was 2 months ago. But now your interest rate is lower, your monthly payments are lower. And so more cash flow day one for your rental properties, better return on investment, all that good stuff. This might allow you to be able to put less down as
Yep,
well
yep.
and still get positive cash flow, which is a great way to increase your return on investment
Yep.
for all 5 profit centers.
Okay.
So a great thing for all of us in the community. I think that's why I was making fun of you for being so somber out there. I mean, we've been waiting a long time for some good news on the interest rate side.
Sure.
Let's give a few high fives out there.
Let's take a beat.
We can use this right now, right?
Okay. So is there people out there right now? Oh, so what is the rate that folks are closing at today at JWB, and like what's that looking like?
5.25%.
5.25%.
Yeah.
Okay. Before we expand and talk more about the market, does that mean it might be time to refinance for people? Like, is that like so I think of somebody that's like thinking about buying properties, like, I'm just waiting for it to go a little lower so I have a little bit more cash flow and I can put a little bit less down. That's a trigger. Another trigger might be, oh yeah, like I've been meaning to, like myself, right? Like I've been meaning to refinance and pick up another JWB property.
Right.
Is that something right now is the time to like go poke at that? Like go to chatwithjwb.com.
Definitely.
Set
You
up an
should be
appointment.
talking with experts right now,
Yeah.
especially if you're sitting on a lot of equity in your real estate, in your rental properties, in your home, in your primary home. You should be talking with those who you trust and who have been here before to navigate this, because this is a great time to potentially both unlock a lot of equity. As a country, we have trillions of dollars of equity sitting in our real estate right now, and also potentially lower your payments. Now, that's dependent on what the interest rate was ahead of time. But I remember in our conversations for that third property that we highlighted last time.
Katina.
Yeah, Katina. Your interest rate, I think from my memory, is like 5.75%.
Okay.
So
right now I would be looking at dropping my interest rate.
You could,
if I was
right?
to refinance.
Yes. We need to take a look at it, because we would have to look at what is the rate buy down points and things of that nature. But yeah, this is the time to strike open that conversation.
Yeah.
So for new clients, for current clients, reach out to JWB, set up some time to sit down with your portfolio manager, and we can lay it out for you and say, listen, these were your interest rates on your previous properties. This is the amount of equity you have sitting in your properties. These are your goals to be able to get to that place you want to get to financially. This is how we can use all of our resources here and add more properties to your portfolio, or refinance and get that capital out for you, which, by the way, you don't pay taxes on it when you take that money out and refinance, and bring the capital in. So, and maybe it's refinancing the capital for you to do other things.
Yeah.
But you should be able to have that conversation right now, because this is a wonderful time to be able to use the resources that you have.